for some of our users, we weren't charging enough. And so the analogy I've used is like, if you're going to go to a restaurant, it's nice if it's not too expensive, but if it's too cheap, you kind of don't trust it because it's not worth getting food poisoning over some savings.
Mhm. Russ, thanks for joining. For those listening, Russ is the co-founder and CEO, former CEO of DocSend. Great background. You've done a lot in your career. Stanford undergrad, Harvard Business School, started a few companies, worked at some of the big companies. With your most recent, where we originally met, probably 2014, was DocSend. So thanks for being here. I appreciate you chatting today and sharing your learnings.
Yeah, thanks, Mike, for having me on, and it's great to be on the show. So I'm excited to talk about it.
Cool, cool. So we'd love to start just with the origination of DocSend, because if I recall correctly, you were at Meta, Facebook, at that point before you started it. What led to the originating idea for DocSend?
Yeah, sure. So just to back up a little before that, the first company I started was Pursuit, and we had raised some seed money. We had me and two co-founders, who are all engineers, had built and launched a first product there, selling into HR. Decided that wasn't going to work, so sold to Facebook as a talent acquisition, which was great. A great timing, the right decision to make at the time. And so I ran product management for the Pages team at Facebook. Got to see them go public, which is fascinating. But I still had that itch to go start a company. And what I wanted to do is go start a real business because I just think it's fun to build software. I think it's fun to get stuff off the ground. And so I started DocSend in 2013 with two co-founders, Dave and Tony. We all went to undergrad at Stanford. We all worked together at another company called Graystripe, a mobile ad network. And when we started DocSend, we didn't know what we were going to build. So some founders I've talked to have had the kind of arc or the narrative around like, well, at age 4, I knew I needed to solve this problem. And so then my whole life is dedicated to that. And that wasn't the case for us at all. It's three friends who, have software backgrounds who want to go start a company. And from my first startup, I had learned that it's really important to really validate the market you're selling into before you start building, because as a software engineer, the temptation is just to start writing code. But as soon as you start writing code, you have this irrational escalation of commitment that happens, and you kind of feel like you got to keep following it. And so before we settled on DocSend as the idea that we were going to build, we looked at a bunch of stuff. We tried to sell things to different audiences. One of my co-founders, Tony, loves cars, and so we thought about building software for car dealerships
Hmm.
because, hey, maybe they could use help. Then we went and talked to some car dealerships, and we're like, we don't really want to sell car dealerships. Because I was at Meta before and, had all this great knowledge about the Pages product, we're like, hey, maybe we can monetize or build a business around Pages on Facebook, for small businesses. And so we looked at that and decided against it. And we kind of came back to DocSend for a few reasons. And in my mind, the central reason was that people were just sending a lot of attachments over email. And that just seemed odd. Even, back in 2013, there were so many ways to send a link and not an attachment. There's like a file size limit. It bounces. You send it. You can't, like, people can't view it. Like, there's all these issues. And so we were just really perplexed by that. And I had also interned at Dropbox in 2010 when there were 15 people there, and I got to see how well Dropbox was doing. And I thought they should solve that problem, but they just empirically hadn't at that time. So we went and interviewed a lot of companies. We looked at a lot of other products. Tony, another co-founder, had also worked at Encreo, a company that sold to Box, kind of in the document space. And we basically couldn't prove that it was a bad idea. And we called it DocSend because we wanted to be literal, and it was document sending. And so it's like really straightforward. We are sending documents, and we want you to send them as links and not attachments. And the idea was, if we can add enough value to you as the sender that you're going to send a link and not an attachment, and we can make it easy enough for the recipient to click on that and view whatever you're sending them, maybe we can change behavior. And so that was kind of the core idea there. And that functionality existed in a lot of other products, but we really wanted to make it clean and like something you could use on its own. So after doing a bunch of user interviews, we built a beta version. We started handing it to people, And I've often said that you can prove something is a bad idea if you give it some time. Like a lot of things, you'll just be like, ah, okay, that's not a great idea. But you kind of fail to prove something is a good idea. You just keep working on it, and you're just like, okay, well, I still am not able to find great reasons to not do this. So
Mm.
at a certain point, we're like, well, I think we're just going to do this. And so we raised a seed round, 1.8 million, and then we scrapped the kind of first version we had built and launched it at TechCrunch Disrupt in 2014. And the pitch there was see who's looking at the documents you're sending them and what happens after you hit send. And so there's a lot that happened after that, but that's kind of the first year of the company was basically just wondering, why is this a problem? This seems dumb. There should be a better way of doing this. We cannot figure out why there isn't a better way of doing this. We're going to go start a company centered around solving this problem.
And I really want to drill down into that first year because I think that's one of the most interesting times, and it's where a lot of people either they don't make that leap or they do make that leap, but they're flying blind. And so maybe we can back up just a little bit. In when you got together with your co-founders, did you guys quit your job? Because this is a big question I get from a lot of entrepreneurs. Should I quit my job? I'm not sure I have the right idea. Did you guys quit your jobs and then say we're going to go figure it out, or were you still working at your respective companies and just kind of were testing the market on a few different ideas first? And then at what point did you quit your job?
Yeah, great question. Because that comes up a lot too for people I talk to, and there are definitely examples of people who have made it work as a side project while they have a job and they quit to pursue it. And maybe that's the better way, all things considered, of doing it. Certainly, it de-risks it. However, it's really hard to give a new project enough brain space to get it off the ground if you've got a day job. So in our case, we all quit our day jobs. The ad network we'd worked at, Gray Stripe, I had left to go to business school. Dave and Sony had stayed. They'd sold that business, and then they were leaving the acquiring company. And so I left Facebook, and the three of us met up. We each put in $100,000, not of like money we needed for savings, just money we could you know put into this and spend it on like seeing if there's a there. And we said we'll give it a year and see if we can come up with something we're excited about.
Cool. So
And so
you kind of knew the people that you wanted to work on something with potentially.
yes,
You all quit
that's
your
what we
job,
did have.
put in a
We
little bit.
had the founding team because we all knew each other. We'd all worked together before, and we wanted to start a company together.
Yeah.
And so
And
we would just rotate apartments, and we'd have one day at my house, one day at Dave's house, one day at Tony's house, and we would just have spreadsheets of ideas and like things that we were going and testing. And like every day we'd sit down together, we'd make coffee, and we just like look into like what are we going to start and what are we going to dedicate all of our time to.
cool. So full-time dedication, and you gave yourself a year. And how do you think that helped or didn't help you guys narrow in on something, giving yourself a time constraint like that?
In my mind, it was important to give ourselves a little breathing room so we didn't jump at the very first thing that we looked at, because that had been my experience with Pursuit was I was solving a problem that I had in a previous job,
Mm.
and there were some aspects that made it not work that I could have seen at the beginning if I had been a little bit more thoughtful. And so with DocSend, I really wanted to be thoughtful at the beginning and go out and sell vaporware to people, just have conversations, just really think about it. So we spent 3 or 4 months before we picked a domain, bought a domain, looked into trademarking, like really kind of incorporated and like started building in earnest. And I'm glad that we took that time. And so by saying we're going to spend a year on this, that meant we didn't need to pick something in week 2.
Yeah.
And so some of the first ideas we went through, a couple of them could have been good companies, but I'm happy that we settled on what we did settle on.
And on the flip side, you knew that if you wouldn't spend 2 or 3 years just kind of kicking ideas around, which is also a trap that I've seen some people fall into if they have the means to be able to.
Yeah, certainly having some urgency is helpful. And so we weren't interested in sitting back for too long. And so we really spent, like 10 hours a day really just looking at stuff. We put a lot of pressure on ourselves to pick something. One of the things we did that's a little unintuitive with DocSend is, once we came up with the concept for it, one of the questions we had is, why hasn't someone else already built this?
Yeah.
So I just networked my way into talking to other companies that I thought should build DocSend or the concept behind it. So I talked to Google and Microsoft and Box and Dropbox and even Yahoo back in 2013 when they were a little bit better known. And a common response I got was, "Hey, that's a great idea. We might build it someday. Also, we'd like to buy you," because we were three engineers, and so we got some talent acquisition offers. But I had just been through that at Facebook, and we really wanted to create a business out of it. And the way we judged if a company was really going to build it, because if someone was going to build it tomorrow, we wouldn't have done it, right? Like we would have been like, okay, that's just taken care of. We would have gone on to the next thing. But the acquisition offers we got, we would have worked on something unrelated to DocSend. So if a big company tells you we might get to this, but not for a couple of years, in my mind, that means they're just never going to get to it. Something that's 2 years out is just never going to be at the top of a company's list. And I felt pretty comfortable going around and sharing what we were doing because while I was at Facebook, I would talk to entrepreneurs and they'd be really cagey about like, oh, I can't share what I'm working on with you. And my view is always that I would be terrible at my job if I was like, listen, everyone at Meta, like drop what you're doing. We're going to compete with this like no-name startup that has an idea. Like ideas are like not that defensible. Execution is what you need to just go do. And so I figured we had more to gain than we had to lose by being open and sharing what we were going to work on with DocSend and sussing out if it was actually on someone else's roadmap.
Yeah. And big companies don't want to compete or go build that brand new thing. To some degree, they kind of use the startup market almost as like their outsourced R&D department. And then startups go and build, and then companies can come back 5 years later and say, oh, this one worked, let's acquire them, which we'll talk about in a little bit with your story. But I think
Yeah,
what
that's certainly true. Yeah, and we did have over the years some big companies declare that they were going to compete with and put DocSend out of business, and you know sometimes that impacted us, but mostly not.
yeah, yeah. I think that's a really interesting insight too as an early founder, because it's very easy when you're starting something new, and I remember this in the early days of Branch. It's very easy to go out and you have this initial idea and you're like, oh man, no one solved this, right? Because I've never experienced this solution. And then you go out and then you start doing research and then you realize, oh crap, there are companies that are kind of adjacent, or they're doing some part of what we're thinking about, or
Hmm.
there's enough big companies out there that could build this very easily in 6 months and kill us. And that can create almost an anxiety or fear to starting. And so, what advice do you have for people that are kind of in that they have an idea, but they go and look and they say, oh, but we could be crushed in 6 months by a big company. Should we even do it? And then that being a blocker.
Yeah, that's a great question because to some degree, there's always a risk that some big company is going to crush you. And I have seen examples of that. Like there are a bunch of examples. And so I often get a question of like, hey, why won't Google go do this? And my response is like, well, I talked to Google and all I can tell you is they're not. They're not going to do this. Uh, and so that's sometimes the best you can get
Yeah.
for why something's worth doing. It depends on the vertical. It depends on the business model you have. There are a lot of other factors, but I think going and talking to potential customers and just seeing kind of what the need in the market is just the most important thing. Like, is there an urgency there? And then by and large, as a company, especially early stage company, you just kind of have to pick your direction, make your bet, and then you're running your own race. And so it's kind of up to you to go build and win market share and see if there's a there there. For every company where they kind of miss the window, like it's not great to, be the third after Uber and Lyft. Like there are some situations where someone just had unlucky timing or it's just a bad time to start something. But I think those are pretty easy to suss out. Most of the time, if you just see an opportunity in the market and someone else might be doing it, but no one's really doing it, I think it's probably worth you just got to go build it and see if you can win.
Yeah. Yeah. I think we experienced that too, because when we started Branch, we got really excited when a few weeks in, and then we realized, oh, there's some competitors who are a year ahead, 2 years ahead, and they've raised a seed round, and it would have been very easy to just give up and stop. And I think our instead we said, let's lean in, let's focus on our niche, which is a little bit different, and let's see if we can get market share there. And that enabled us to get enough traction, and then allowed us to expand later. So if you have a niche, if you have something you're really excited about, and there's not somebody already successfully winning it, like you said, Uber and Lyft, go after it. See what happens. Worst case, you'll learn a bunch.
And I'm usually okay with startups aiming pretty narrow in their initial go-to-market. The typical investor view is prove to me this is going to be giant tomorrow, everything to everybody. And you're like, okay, well, it could be. And like, that's kind of what you have to show that it's a big, TAM. But practically speaking, that's not very motivating to your teams that you're hiring. And it's really hard to get started on that. So, it sounds like for Branch, you had a more narrow segment of the market you felt more confident going after. And we had that with DocSend as well, where there was a pretty narrow audience that we decided we want to go after, and we were able to use that as a beachhead and expand into other use cases from there.
Yeah. I was talking to an investor recently who they funded a company that started with just CRM for healthcare. And that was maybe a $500 million TAM. So it wasn't necessarily the most attractive TAM. But as they got years in, then they realized the TAM could grow as they expanded into either other product or other verticals, or in other ways. And that enabled them to really grow into a much bigger company. But you're right, you don't need to necessarily start with a big TAM. And in fact, it can be counterproductive, even if you're trying to tackle too much in the beginning, and then you end up not nailing a niche, which prevents you from actually becoming that bigger company.
100%. Yeah. The joke is always like, we're focused on our top 20 things, which means you're not really focused on anything. So one of the things I learned at Facebook was their approach to going after new countries. And they talked about growth as a series of overlapping S curves, where for any niche, it's like not that much. And then you kind of hit this inflection point, and then you're going to kind of run out. And so, as Facebook was marching through countries, like, how do we get Brazil on Facebook? You're like, kind of work on the Brazil growth team and the Japan growth team. And to some degree, I've seen that work really well with startups where pick something narrow and small, you can get a following there. You can usually leverage that to get somewhere else and leverage that to get somewhere else. So I think from the outside, it often looks like companies just hit it big and we're lucky and like, oh man, sometimes you just really luck out. And my experience is not that at all. It's like it takes a lot of work along the way. And our joke with DocSend was always that we'd be an overnight success after 10 years. And so, after 8 years, we became a success. But it did take a lot of iterating and then leveraging each piece to get to the next piece. So if you look at our revenue curve, it looks like a perfect hockey stick, but that wasn't my experience at all going through it. It really was a lot of little wins that built on top of each other, then a lot of decision making and getting from one place to the next place and kind of learning as we went. So I do think it's okay to start small and have some faith that you can get somewhere that you can then leverage what you've done to get somewhere else that wasn't available to you at day one.
Yeah, spot on. Yeah, the 10-year overnight success is something I hear quite a bit in the startup world. Okay, so you and your co-founders, Dave and Tony, got together and you would meet about these ideas and you discuss them. Did you guys set criteria around what the ideas could be, or was it kind of an open forum, consumer, enterprise, B2B, SaaS, anything? And how did you guys think about setting that criteria in order to go test the market?
Well, being three engineers, we had a Google spreadsheet, and we would have ideas in there, and then we'd have criteria, and then we, kind of score them. And then one of the things that's hard with multiple founders is how do you suss out who's most excited about what? So each week we'd have a number of points that we could assign, 100 points we could assign amongst ideas. And then we'd look to see like, well, how many points are you assigning? Are you pretty split this week evenly between two or three things, or you're less excited this week or more excited this week? And then like that scoring mechanism would help us then the following week double down on like, okay, Dave is really excited about selling things on Craigslist and how we can make a better experience selling something than Craigslist. Like, okay, well, let's look into that. Like, is that a consumery thing? Like, what would we build? Like, what would that look like? Or, like one of us is excited about how do we rate software? Like, is there software rating? And that's now G2 crowd, but, at the time that they weren't around. And so we were looking at that. And so we just have to have some time where we're off information gathering, researching, talking to people. We would also do need finding interviews where we record them and then transcribe them and try to look for trends, even when we were trying to go out and talk to the outside world about a particular idea and how exciting it might be to somebody. And so that really helped keep us aligned and try to stay documented and have some criteria to look at things on. And we certainly liked B2B SaaS. we were pretty afraid of consumer. Consumer just feels really hard to predict. It's like some things are huge and some things aren't, and like what's the difference between them? We're like, I don't really know. So just our DNA felt better suited to building something of value that people would pay for. And so that's kind of where our excitement seemed to kind of crystallize around.
Yeah, I was talking to Vanessa Larco earlier, who's a partner at NEA, and she was talking. She started a consumer gaming company, but she invests in enterprise SaaS now, and she was saying consumer companies, as quickly as they can grow, if they become viral, that's how quickly they can crash. And she was always kind of on edge, thinking about, is this, is something wrong? Is something going to crash? Are we going to lose all of our customers today? Enterprise SaaS is not necessarily that way. It's a little bit of a slower ramp, but it's much more predictable and kind of more sustainable.
Yeah, and just to clarify, DocSend didn't end up being enterprise. We ended up using consumer tactics to grow a
Mm.
B2B SaaS company, which is different than what we initially set out to do. But part of, I think, starting a company is having some insight you feel strongly about, and then you just have to follow the thread of where that takes you. And so it's kind of a journey of discovery. In that we typical enterprise SaaS is top-down sales, very sticky, big multi-year contract with expansion, and that wasn't our DNA. None of us were enterprise salespeople. So we did stay in the B2B land, but we did find some really interesting ways of growing the business. And now that's coined product-led growth. But at the time, we just thought of that as like, what are evergreen ways of growing this thing at a relatively low cost? And those are just pretty crafty, interesting, fun to work on type of things. That ended up kind of being what worked best for us. But I do agree with you on the scariness of consumer. While I was at Facebook, we saw the rise of social cam and rocket up and then rocket down. And they're like, oh man, I would hate to be in charge of that company. That's got to be an emotional roller coaster. So yeah, we did try to stay in the kind of area of just adding value to people and changing behavior. We often talked about how we're really in the business of changing people's behavior and adding value in a way that's sustainable and kind of long-term reaching, which is what felt safe and felt, good at the end of the day and also felt sustainable as a business.
Yeah. And that's, I mean, we've been using DocSend at Branch since basically we first met, probably 2014, 2015. So from the very early days. And what I always loved about it was it does have that kind of viral component of it where if we send our all hands out to 500 employees, every single one of those is seeing a DocSend link. And then those people can go self onboard, or they go to another company and they know about DocSend because they've seen a link, they've used it before as the kind of consumer. And so I love that product led growth initiative, and I think it makes a lot of sense for a company like DocSend.
Yeah, well, part of the trick is just go to market. And also to your point around how do you know something's worth building or not? When we did TechCrunch Disrupt in 2014, it was exactly like Silicon Valley, the show, and it was just too close to real life for me to watch that show. But we were on stage, and the judges disqualified DocSend pretty much immediately. And one of the questions they asked was, "Isn't this just like the 40 features that Google Drive should build?" And I remember thinking like, "Yeah, it kind of is." But not quite. And so the trick for us was always it is generally useful what we built, but how do we vertically market it? And how do we highlight the value that it brings to people in a way that they can connect with and then, change their behavior and start using it. So, your use case is actually just one of a lot of different use cases for DocSend. And that's what we iterated on over time is kind of like figuring out when and how it was most useful and then trying to document that for users and then kind of increasing those flywheels around awareness and then converting that awareness to new users.
Yeah, and here we are 9 years later, and Google still hasn't built those features. And I think we over-index on thinking, well, a big company could go build that. And if that's the way you view the world, no one would pretty much ever start a new company. And so you have to have a little bit of faith in that you're going to build something that's of value, and you're not going to get squashed by some big company, hopefully.
Yeah, and we did have companies, like LinkedIn at one point said, they bought a competitor and then they competed with us, and by and large, it didn't impact us at all.
Yeah.
We had other companies we had a couple instances, I won't name the companies, but they tried to buy us for a cheap amount, saying that we're going to compete with you, and then they tried to compete with us, and they weren't able to do a great job of it. So I do think there's also something to be said for working on something that's your primary focus and that's it. You have to succeed at it, and that necessity makes your product better and makes you more focused on it. And for a larger company, one that's moving slower, and two that has a focus in some other area, it's just really hard for them to do it well.
Mm-hmm.
So
Yeah. So in the beginning, you had three founders and you were figuring out ideas. How did you determine founder roles in the beginning?
we were lucky in the sense that we'd all known each other for quite a while and worked together before. So we've always been pretty flexible around who does what, and we just wanted to make the company successful. So we had equal equity amounts, we paid ourselves the same, and so titles was more around interest areas. And so, Tony was the best engineer and also the most paranoid about the server staying up. He was clearly the CTO. And then I had already started a company and sold it and went to business school. And so I did the fundraising. And so I was the CEO. And then Dave, the third co-founder, was the COO. And what that functionally meant is that we were all engineers at first and just writing code. And then as things took off, we had to separate our roles more distinctly. And then, Dave and I traded back and forth responsibilities a lot. And so Tony ended up owning kind of engineering, product design, and then Dave and I would kind of like manage the business sides of DocSend. Then it was pretty fluid. Like he managed marketing for a while, I managed marketing for a while, and as things evolved, we just kind of had to continually load balance around who's doing what, depending on what it is. But co-founder relationships are so important because you really have to roll with the punches, be flexible, not have a lot of ego in it, and just really be pulling for the success of the company and do whatever it takes. Because so much of the stuff as a founder just feels really gritty and like the things you don't want to work on are often the things that really need to be worked on. And so, I feel very fortunate that we were all able to, be direct with each other, give each other good feedback, and kind of be flexible enough to ultimately make the company a success.
Yeah, it's this concept of roles don't matter if the company doesn't make it. So first priority
Absolutely.
is make sure the company survives, irrespective of what everyone's doing. And I think sometimes people get caught up in what's the role, what's my title, et cetera. And the more you can just say, hey, we're all in this, we're going to figure it out. And then later on, we can decide exactly what roles or titles make sense once we get to a certain point or prove product market fit. Then you're all aligned. And I love that you kind of split equity and paid yourselves all the same, because I think that really speaks to that rather than one person feeling like, oh, I'm less than this other person. That's really great.
I see a lot of different setups work, but in our case, all of our time was equally valuable.
Yeah.
So independent of like the title, we've just known each other for that long, and that did always irk our investors that at the top of our kind of org chart, the three of us were right in a line. And, some investors want the CEO to have an iron fist over everyone. And it's like, well, the good and the bad of working with people you've known for a long time is that it kind of transcends one person having an iron fist over the other people. And so it's just the way it was. But it was very much a strength for us, just being able to be a check and balance on each other, and kind of get done whatever needed to get done.
Yeah. What I also love about that is you all had engineering backgrounds, but you also had a diversity of backgrounds and interests. And that kind of combination of shared foundation, but also diverse thinking and diverse experiences, you having, started a company before going to business school versus, Tony on the CTO side, that kind of forms that foundation. Very similar with us at Branch, we're all engineers, but we had different experiences. And so we all had different strengths versus three back-end engineers that all want to build the same thing, or three business school students that, all have the same skill set of fundraising and presentation building and selling. That can be a lot more challenging because you're kind of missing some of the key skills, right, along the way. So I think you guys nailed it with your founding team.
Well, thanks. Yeah, it was certainly for us something we talked about for a while, and it was fun. It was fun to go do. I do think, for me, there was a lot of accelerated learning around go-to-market functions. Like I had never built a marketing team before or a sales team before. So part of me thinks that it would have been nice if I had those experiences coming into it, but I was able to figure it out as we went and make a bunch of mistakes.
And how'd you
So
figure it out for people kind of in a similar position right now, building sales and marketing despite not having a background in it?
I think part of it is taking the tough medicine up front. So for me, I knew I didn't know a lot about sales or how to do marketing. And so we got advisors, and that was kind of helpful, but primarily I just went off and did it. And so I would be the person selling it and kind of making mistakes and then talking to other people who've been through it before. We had an independent board member who was phenomenally helpful to me in a bunch of ways. And the joke I heard was, you'll get it right on your third VP of sales type of thing. And so I did spend a fair amount of time asking for advice and getting stories from other, especially technical founders, around just what lessons can I learn from them and not have to, make those mistakes on my own. But then just kind of immersing myself in that was really helpful. And even doing that, I still made quite a few mistakes, some of which were avoidable, some of which just had to be. But we went through a couple iterations on our marketing and sales teams before we kind of found the right fit of just our overall go-to-market motion for DocSend. And there's just a lot of variables to consider when you think about what does your product lend itself to? What are the superpowers? Like, is it primarily, demand gen that you're spending on? Is that the kind of key awareness generation mechanism? Are you doing cold outbound sales? Is it product-led growth? So it's mostly transactional. There's just a lot of different variables to play with. And part of the hard thing about getting it right is that you need to hire teams that are aligned with the go-to-market motion that you figure out is best for your product. So, hiring a VP of sales whose DNA is in enterprise sales, but you have a transactional sales cycle, it's hard for them to adapt to that. And so you really need to make sure you're hiring someone who's really interested in what you think is going to be the right fit for your company. So those are a lot of the learnings for me around what's the level of exec to hire into the role, and then how do you kind of set them up for success, and then how do you build out a team underneath them and align them with kind of where your business is going.
Yeah. And one of the things you said earlier, which is something you just need to go do it. I'm a big believer that if it's something new, just go out and do it 1,000 times, 5,000 times. Go make 1,000 phone calls. Go do 1,000 sales calls, and you will learn so much. 80% of that learning happens in the first couple hundred times that you're doing something. And then from there, you can optimize and eventually hire that leader to come in and take over. But that was exactly what we did as well. I'd never led a sales team either. And so I was the SDR, I was doing the outreach, I was doing the sales calls, and eventually you learn it and then you pick up tips along the way. So I think that's...
Yeah, 100%. That was our experience as well. And we were fortunate to have a couple learning experiences where we, had to pivot a couple times in our history. And one of them was where we were selling up market into sales enablement. And we still have a lot of customers in that vertical, but by virtue of being in all those sales calls, I actually had the experience to decide that that wasn't going to be our primary go-to-market motion. So I feel really fortunate that I was in all those calls and had a really good finger on the pulse of that part of our business, so I could decide kind of what the right path forward was for us. And there were some tough decisions around that. But yeah, I agree with you. The best way to learn is to just jump in and do it 100, 500, 1,000 times.
So many founders want to, I think, offload those things like sales, and hire somebody too early before you've really found product market fit. And I think that's kind of that key distinction of, you as a founder probably need to do that for a while, for a long time, because like you said, you're still figuring out the motions, you're still figuring out which persona to sell into, which verticals to sell into, what motions are working or aren't working, and then tying that back to the product, which is hard to do if you outsource that to a new VP of sales who's kind of just figuring it out or has to build a lot of different things. So I'm a big fan of founders doing it themselves for a really long time.
Yeah, and there's an irony in that what I was and probably am still best at, which is just around product and engineering stuff. That was because Dave, Tony, and I had so much strength there. Those are the things that I didn't have to spend time on, both because my co-founders were covering it and I understood it really well. So I spent a lot of time with our product teams and designers and kind of all that part of the company. But on an hour basis, I spent the vast majority of my hours on the things I was the least good at, which were the things our company had the least experience with, which were the go-to-market functions. So it certainly didn't feel great at the time to be spending all of my time on the thing that I was like not especially good at. But if I had tried to outsource it too early, I would have lost touch with it and I wouldn't have known if it was working or not and why.
Yeah. Yeah, you want to outsource the things that you don't like doing or that you're not good at and therefore you don't like doing, but it is super important to do it. I think that was one of my big learnings too, which was you just needed to put in the time. I knew that I needed to put in extra hours because I was learning for the first time going through a lot of those things. So a lot of people would look at that and say, why are you putting in so many hours? Because I'm figuring it out along the way. I'm making mistakes. I have to redo things. Now, the second time around, not the case. You kind of have that knowledge, have those skill sets, which makes it much faster. You don't need to spend as much time doing it. Okay, so first year, kind of figuring out product market fit, you get there. Tell us about kind of scaling and especially some of the biggest learnings you had scaling the company from year 2 through acquisition.
Yeah, one of the funny things about going through the whole startup journey, and you probably feel similar with Branch, is that if I had to do it over again, I feel like I could do it in half the time. Or hindsight's always 2020 on things. But when we launched DocSend, we thought maybe it'll just be kind of viral. Maybe we'll just make it freemium and it'll just spread everywhere and it'll be like, ta-da, and it'll be huge. And we launched it and it was a bit of the kiss of death where it wasn't exponential, but it wasn't a zero. It was just linear. And we're like, okay, well, it's not a zero, but this isn't growing fast enough to really justify, like it's just not going to like take off on its own. So we started charging a little bit. But being on the front lines, I also sold a couple larger, like 50K, 100K deals with it, selling into sales teams, just as I was just need finding, because we made it very general purpose. And so we were just kind of looking to see who's signing up for this product, where do they find value, where is their usage. And so the V1 was just like, make it free, see if it takes over the world. The answer was no, it did not take over the world. Crap. So version 2 was let's go sell to enterprise. So then we went up market, we sold into sales enablement, and that was a huge learning curve. So we raised 1.8 million for the seed, and then a couple years later we raised 8 million for the Series A, but we didn't have a lot of revenue at that point. It was still just kind of raise the money to have it, and also just kind of hoping that we would figure it out. And then, as I was told, like every business plan eventually needs to prove itself in terms of creating a business out of it. And so that came for us after we raised our Series A of 8 million. And so selling up market was really hard. We hired up a whole SDR team. We had AEs, hired a VP of sales. And one of the things that was really not in our favor that we couldn't control for was the sales enablement space got very competitive. So our competitors started raising hundreds of millions of dollars and they were just blanketing the market. And so we just started seeing our sales deals become more and more competitive. And I was kind of looking at the numbers in our CRM, realizing that we were having a lower and lower win rate when it gets above 50K. And some of that had to do with positioning and feature set. And it was still a good business to be in, but it was clear that wouldn't be the major growth channel for us, and that people who were buying in that vertical were buying because of some stuff that we had that was different, but it didn't seem like we could really win there. And it also didn't seem like a winner take all space. So version 3 of DocSend was in 2019. We kind of, well, actually, I guess it's 2018. We redid our marketing site. So we changed plans, positioning, and pricing. We left the product the same.
Whoa.
But I talked to like a few hundred, maybe 500 customers that had high usage. And I would just ask them, like, why do you like our product? And I had some really enlightening conversations where I remember one investment banker in Toronto was like, I love your product. I use it all the time. I'm like, how do you use the product? He's like, well, I send the documents to my secretary. She sends me back the DocSend links. I send the links out. She then sends me screenshots of people using them. And I was like, oh, that's great. And he's like, the crazy thing is I don't pay you. And I was like, well, your secretary pays us $10 a month. And his response was like, well, like I said, we don't pay you. And so we changed up our marketing site and how we position the product. And it was fascinating. It just started to take off in the background. We'd been underpricing it. So we added in our advanced plan, which had a lot more just like messaging around security, as well as just talking about security and like really highlighting how some power users were already using our product. And we just started to convert better. I thought that we would convert at a lower rate, but at a higher dollar amount. So like net might be, worthwhile. We called it Project Couch Change. And I thought, man, maybe we can get an extra 50, 100K in ARR out of this. And now it's tens of millions of ARR like later that we've gotten off of that.
Why do you think?
But
What do you think the conversion rates went up when you increased price?
for some of our users, we weren't charging enough. And so the analogy I've used is like, if you're going to go to a restaurant, it's nice if it's not too expensive, but if it's too cheap, you kind of don't trust it because it's not worth getting food poisoning over some savings.
Hmm.
And for some of our customer base, especially, bankers or people in financial services, or even, if you're fundraising, you're using our product for this incredibly important set of things you need to do. And, if you're comparing it against a data room might be 20K a year. And so you're like, okay, this thing at $10 a month can't possibly be the same as this other thing at 20K a year. They just can't be equivalent. Like, I just don't trust it. And so when we put the advanced plan in place, which is $150 a month or $1,800 a year, that suddenly meant people could trust it. So it had to be a little bit more heavily considered, but conversion actually went up on that plan. And then we were also able to do a lot more need finding around what people wanted there, around data rooms, e-signatures, one-click NDAs, dynamic watermarking. And so as we started to add those things in, that advanced plan just took off like crazy. And so it is crazy to me in retrospect that we were so close to something so valuable. And it really just required us changing our plans, our positioning, and our pricing. And so we did that in 2018. And that started to take off to a level where we just decided to have the whole company focus on that.
Wow.
And so we still sold into sales enablement, but we really downsized that part of the company, which was really tough. So we did a layoff where we let go a lot of people who were selling into enterprise. And our thought process at the time was, we're pretty small. It's still pretty early. We really need to focus on what's working. And if we only had, we had no other choices, sure, maybe we'd keep selling at market and doing the outbound sales motion, but we decided that we wanted to focus everything on the kind of sales assisted, but mostly self-serve motion, where 95% of our net new ARR was self-serve. And so we still had a small sales team, but we only had 3 AEs. And that started to really take off. And that was in 2019. And so that was really fun to kind of see those things come together. And it felt like pretty smooth sailing from 2019 to 2021. And then we had an inbound offer from one public company, and then went and talked to Dropbox, and they made us an offer. And then everyone decided that, hey, this is a pretty good offer. And so at the time we sold for what was a pretty modest multiple. And so we were actually got to profitability. And the thought process there was that because of our go-to-market motion, our revenue was growing faster than we wanted to grow our headcount. And so we just kind of hit profitability accidentally. And so we got an offer from Dropbox and we took it. And so, that was kind of the end of it, in the sense of like, it felt very easy at the end. After slogging through for years, we figured out some stuff. The product was growing really well. Like, customers were really happy. Everything was clicking. We'd only raised 15 million and we sold for 165 million. So we beat the IRR of all of our investors firms, and everyone's really happy. And also Dropbox is incredibly happy with it. So really interesting outcome to it. But as I said earlier, if you zoom out, it looks like a very smooth hockey stick. And so the joke we had was like, man, I bet people are going to think we just got real lucky if this works out for us. But it required a lot of paying attention and iterating and kind of fine tuning of things to get to something that really worked well at the end.
I think that's a common misconception. People just kind of assume that the smooth hockey stick happens and you either got lucky or you kind of found a perfect product market fit. When in reality, it's just a lot of work. And I think that helps, for me at least, it helps lower the bar of imagining starting a company. Because if you know that, hey, there wasn't some magic secret sauce here necessarily, it was just tested some things, iterated, and then just put in the work consistently over time. And eventually the output is that hockey stick growth. But it's not promise, and it's not just luck. It's through grit and hard work and resilience and kind of consistency over the years.
I think so. Yeah. And some companies, I think, definitely have an easier time of it in the sense that the first thing they try just works and it just takes off. But those are pretty rare in my experience. A lot of them require a little bit of tweaking in the middle. And then certainly scaling has its own issues, and what worked yesterday is not going to work tomorrow type of thing. But yeah, it is following that thread and kind of continuing to iterate.
It's really fascinating. The pricing piece is especially interesting to me because I think it's one of the things that's hardest to get right, but you can test and iterate and learn. And I think you nailed it when you said you don't want to price too high, but if you price too low, to some degree, you lose credibility. And so
Hmm.
you can test pricing higher, double your price, and then see what happens. If your conversion rates, are cut in half, you're still making the same amount of money. But if they don't drop that much, then you're making more money at the end of the day. And I think that's a common misconception of wanting to avoid charging more because you're worried about losing some of those conversions, some of those customers. And so it's fascinating to see that your conversion rate actually went up because it probably built some more credibility in people's minds.
Yeah, it was what they were expecting and what they were looking for. And I only figured that out by talking to a lot of our users. And I still don't know if DocSend's pricing is optimal, but it was certainly better than it was. And it was also thoughtful that we left our $10 a month plan
Mm,
available because in my mind, the internet should have a relatively cheap send and track a PDF feature set. Like that should just be a thing. And then the more expensive advanced plan is really more complicated workflows that are tailored to busy professionals around data rooms and version control and kind of like permissions and more complicated permission models on top of documents and e-signatures and NDAs. And so it is a very effective way of price discriminating where some people can only afford $10 a month and they're happy with the base version of DocSend, and some people feel like they're getting a steal, only paying $150 a month for it. And so it is interesting that there's a pretty big difference in willingness to pay depending on what people are doing with it. At least for us, though, one component that was also helpful was to keep in mind was that because the product spreads awareness of itself, we wanted it to be a pretty transactional sale. So, for most people, they will think about it, but then they put down their credit card and they just pay. And we're happy to talk to anybody who wants to talk to a human. It's just that we invested enough in our help center and all the vertical marketing pages that most people can get all their questions answered. And by going through the free trial in the product, it's pretty clear like what you're supposed to do with it and how it's useful for you. And so most people just never need to talk to a human. And when they do need to talk to someone, our support team actually closes a lot more business than our sales team. So all those pieces fit together in a way that worked really well for us, but it's again not the answer for every company.
yeah, yeah, it's incredible. It's funny. One of the things you said earlier is you launched it and you kind of expected naturally viral growth, and especially as somebody that worked at Dropbox before you started DocSend, I remember when Dropbox launched and how viral that was. I remember getting a link from somebody and it was like get free storage if you sign up, and Dropbox grew like crazy. And I think it's common for companies to just assume like, hey, we're going to launch this and it's going to get viral traction and it's going to take off, when in reality almost the vast majority of cases is not that. It is, very slow trickle. And I think setting those right expectations is important as a founder. Otherwise, you can be really disappointed and end up in that valley of despair because you didn't have that viral growth from the beginning.
And in our case, it was almost correct. So we didn't have zero viral growth, but what happened was people who receive documents aren't always in a position where they're sending out documents, but they're usually in a position where they're also receiving documents from other people.
Mm.
So one of the first places where DocSend really took off was in the fundraising use case. And so it wasn't viral, it was more word of mouth, where an investor would get enough DocSend links or like, what on earth is this? They would figure it out and they'd be like, oh, I get it. I'm being tracked, which they didn't like, but it was like faster just click on the link and go through the deck than it was to like request the attachment or whatever. So they grudgingly, kind of went through it. But then when they were working with their other companies and those companies were fundraising, they would then tell them to use DocSend because they wanted them to have an edge in their fundraising and to get that visibility. So we actually found that we were spreading via word of mouth, not traditional like point to point virality. And that was fascinating to watch. And so we did a lot of work around making DocSend really helpful in the fundraising use case just with content. And that took us a long way, actually. So, to some degree, you might think it's viral and it may or may not be, but you really need to look at the data and be inquisitive around what's happening to try to figure out how you might be able to accelerate something that's already going on in the wild.
Yeah. I remember using it for our fundraising decks, especially in the early days. And it must have been fascinating for those investors to see all these DocSend links and then be like, what is this company? And I'd imagine you got some interest, investor interest, just from that, from them seeing your product in use, huh?
Yeah, and some of how we built it is just kind of our underlying philosophy on company building. And for us, we raised a seed and then a Series A. And that's really where we thought we needed to figure out what our business was around it. And so we tried out a lot of stuff. And then by the time we figured out some of the things I just went over, it's actually a very capital efficient company, so we didn't need to raise that much more. We raised another 5 million on great terms just to have some additional cushion as we doubled down on being a horizontal technology that we marketed vertically. But yeah, we actually got a lot of offers for more money, but money wasn't actually a bottleneck for most of the company's history. It was really just iteration and figuring things out and kind of building the business, which is really fun. But yeah, that was one of our superpowers, was that we were very much on the radar of every VC. So that was nice to have.
It's phenomenal to be able to raise only 15 million and then be able to sell for 165 million 8 years later is, I think, the dream for a lot of entrepreneurs. What advice would you have for people starting a company today? The environment's very different 9 years later, so different than when you started DocSend. What advice would you have?
A lot of advice, I guess. I'd say, first of all, you don't need to start something. There's a lot to be said for just having a job and a career in tech, and you can go a long ways doing that. If you really want to start a company, either because you have a particular idea in mind or you just want the experience of it, it can be really hard to know what advice to listen to because you just get whipped around a lot. Even just looking at the market in the last couple of years is like, oh my God, growth at all costs. Like everything is worth 100x ARR. Like, oh my gosh, no one's worth anything. Like tech is dead. And I remember getting to Stanford in 2002, and that was after the dot-com bust. And they were like, okay, don't even bother studying computer science. Everything's getting outsourced anyway. And I was like, but I kind of like computer science. So I studied it. And so, man, the market goes up and down, and it's just kind of hard to know. Should you raise tons of money, and like the company that raised a ton of money last year is darling, is now like not doing very well. And I kind of come back to some of the core principles around just build something of value, try to figure out what the economics of your business are, try to lean into the things that are hard that might not be comfortable today, to just try to see around corners and get ahead of problems. And yeah, it can be hard to know kind of how big your company is going to be eventually, because you'll talk to people who will really build it up and be like, you're going to be huge. You'll talk to people who will say like, oh my God, it's crap, and everything in between. So especially as the founder, and I'm sure you've had this along the way at Branch, there are a lot of ups and downs. And so you kind of have to modulate those and try to stay even keeled, and just kind of run your own race. So I do think fundraising is an important part of it. I think it's pretty awesome that we're in an environment where even now, and with funding being harder to get, you can still get people to write you very large checks, to go off and try something that's pretty experimental and kind of on the edge of what anyone thinks is possible. And then, yeah, I think building out your team, just be patient, be resilient, be curious, and kind of do the best you can with it. But there's no magic wand, and I think that's part of the fun and stress of entrepreneurship, is that it's different every time to some degree, and no one can tell you what the right answers are, and you just kind of have to go figure it out, as you go. My dad used to joke with me that I should have a mirror in my office that just says complaint department underneath it, because as the founder, there's really no one to complain to other than yourself. So it's certainly not something that everyone enjoys.
I love that. I think that's some amazing advice for people starting a company or thinking about starting a company. With that, we'll end it there. Russ, really appreciate the time and all the advice today.
Thanks, Mike. It's great to be here.
Awesome.